BoE cuts interest rates, but economic growth still faces challenges. The Bank of England, BoE, has lowered the base interest rate from 4.75% to 4.5%, the lowest since June 2023, as inflation declines from its peak of over 11% in late 2022. However, despite lower borrowing costs, the UK economy remains stagnant. BoE revised its 2025 GDP growth forecast from 1.5% to 0.75%, highlighting weak business confidence and fiscal policy uncertainties. Governor Andrew Bailey stated that further rate cuts are a positive signal, but BoE will closely monitor economic conditions before making any additional decisions. Markets had already predicted a 97% probability of a rate cut, particularly after December 2024. Inflation data showed a drop to 2.5%. Inflation remains a major risk. While BoE is trying to support the economy, inflation remains a key concern. The bank forecasts inflation to peak at 3.7% in Q3 2025, driven by rising energy costs. This means households will continue to face high living expenses, and additional trade policies from U.S. President Donald Trump could add pressure on the UK economy. Although inflation is still above the 2% target, BoE believes economic weakness and a slowing labor market may help ease inflation in the coming years. However, inflation may not return to target levels until late 2027. Will BoE continue cutting interest rates? Despite 3 rate cuts in 6 months, BoE may pause further reductions due to inflation concerns. Economists expect BoE to hold rates steady in the coming months, waiting for more economic data before making further decisions. While rate cuts could help economic recovery, rising inflation might force BoE to increase rates again, creating a significant challenge for the UK's monetary policy. BoE balancing economic support and inflation control. BoE's rate cuts aim to stimulate the slowing economy, but high inflation remains a persistent risk. Although inflation has dropped significantly from its 2022 peak, the forecasted rise to 3.7% in 2025 suggests continued financial pressure on households and businesses. Moving forward, BoE is likely to take a cautious approach to monetary policy, avoiding rapid rate cuts to prevent inflationary pressures. This means the UK economy may continue to experience slow growth throughout 2025.